Our Steve Liesman is here with his exclusive Fed survey. Would you say the results are somewhat surprising to you or not?
No, only in the sense that they disagree with Paul Tudor Jones, that they don't see crazy. They do see upside, and they see the same concept of higher stock prices amid higher rates. And I'll just show you some results real quickly. And you can see we've been coming down. What you have here is a history of the S&P 500 year-end forecast, consensus forecast from our survey. And the last 3 months were down, and finally, Scott, they're running back up relative to 2786, which was a number from yesterday. But it's a 2% upside this year and 6% for next year. So that's going the right direction in terms of bullishness, maybe not the bulls are back with bullishness. And if you look at the next slide, what you see is that they do that amid a scenario of rising interest rates. So say call it from 298 now, we go up by a quarter point and then another quarter point. And so stocks defy the drag of higher yields. So conceptually it's the same, but I think this panel of 38 economists, fund managers, and strategists don't see crazy. We don't actually offer crazy as an option in the thing, but maybe we need to now.
What do you make of the 100 basis points? Who cares? that it can be fine for the stock market.
I think, and I've long maintained that under the right scenario, 100 basis points doesn't matter, and the lack of it would create almost as much worry in the right scenario as its very existence in the following sense. If you're going to do 3% growth, if you're going to have inflation run 2.5%, the alternative is people, not people, maybe a single person screaming, they know nothing. Right? So in that scenario, you would want the Fed to be reacting and going up. I will say there is one interesting thing. We did ask a question in the survey, Scott. Do you think the Fed goes beyond neutral? I'm not quite sure the market has priced this in. And what does beyond neutral mean in English? In English, it means that you raise rates to the point where you try to actually slow the economy. And 62% of our panelists think that indeed the Fed will rise above neutral. And I can never be sure I'll get a question to the chairman, but I don't like to telegraph it, but I can say right now, that to me is the biggest question. Does he forecast that the Fed will go above neutral? How much? Maybe a quarter point above neutral, maybe it goes to 3.25, 3.5
When?
over a period of a couple of years. That it gets up there to slow the economy.
We were talking about that this morning with Andrew.
Absolutely.
About if things do get a little crazy, whether the Fed has to step in and cool things off. That's the wild card for everybody.
I think that's right. And then I think you have this recession question that Stephanie was talking about earlier, to which I would just ask Stephanie, with all due respect, when was the last time you or anybody you know correctly predicted that a recession was coming? I don't actually know anybody.
That's what I told you.
So
I worry about it all the time.
It strikes me that the right way to run a portfolio, as unbullish as this is with the statistically probable 20% chance of a recession in the next 12 months at most times.
If everybody was able to predict all these incredible events, they wouldn't be incredible events.
And they wouldn't be television journalists either, for sure.
But you have to admit that the CapEx cycle has been lacking in this cycle. And we're just starting to get an improvement in first quarter.
With what I just said, let me completely contradict myself and say I find it very difficult.
These guys always do that.
I find it very difficult in a scenario.
I'm just looking at the numbers.
In a scenario, the amount of stimulus that's coming down from the tax cuts and the possibility of CapEx in the next 12 months, I find a recession very difficult to happen. In that scenario.
Thank you.
On the backside of that, I'm probably back to my 1 in 5 chance.
And that's why I said 2020.
It's really hard to prime the pump quite as much as being primed right now and to have a recession in that scenario.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.